Hello there, everyone, and welcome to this edition of the podcast. So today we have special guest Harshinii who is joining us to talk about one of the stories in today's Watson's Daily. So Harshinii, what are you going to talk about today?
So thank you for having me, and I'm really excited to talk about one of the articles in today's Watson's Daily. So
Yep.
something that caught my eye was the Financial Times article. So it talks about how the UK business confidence has been really low and at its lowest since 2022. So I found it really interesting to understand the reasons behind that and just sort of realize what steps could have happened before and then now what will be the future impact going on. So my focus is a bit more on the retail industry and then a bit more on the EV as well, but just to sort of give a few examples and narrow it down. But so what I thought was interesting about the reasons why sort of this potentially came up could be a bit more in the past. So you know how we had the national insurance contributions really go up before. I feel like that had a direct impact, obviously, on the companies because they had sort of increased their employment costs. They had to fire employees to sort of offset their costs, increase their operating costs. Then again, the shop timings had to be changed because they were sort of trying to offset the increase in the NICs with the cost that they would have in the operation of these stores generally. So it was just interesting to see that obviously was a blow off for these companies and they're sort of recovering from something like that. And then now again, with the tariffs that have sort of come in, they've directly impacted the costs of these retail stores because again, they're importing a lot of these products and the costs of these imports have just gone up. And then that has impacted the cost of these businesses as well. So that I thought was one of the interesting reasons why this probably happened. And then the second thing is now we're seeing businesses, sort of the UK businesses pushing to scrap the de minimis principle. Now that was just basically a situation where if the imports are if the imports to a country are below a certain price, then you don't have to pay taxes on it. So that makes it really cheap for other countries to export if it's below that certain level of price. So again, the benefit of this generally goes to other importers like China. You've got other companies like Shein and Temu that they generally come in. So there's that risk that businesses are facing right now of a lot of floodgates of these products sort of coming in. So that's a real risk that's happening that I feel like is the second reason why this business confidence is sort of just really haywire at this point of time. And again, it's just really interesting to think about what the impact that this has and why the businesses are sort of affected by this because and then it also is interesting to see what the UK government and what is the pressure that has been put on the government to sort of bring in policies that will help these UK businesses. So now it would really be their time to shine with those policies. So what I think would come in is, again, I feel like the UK government would be more slightly inclined to sort of have these policies to protect the UK businesses because we're seeing a little bit of that pattern sort of come in already. And an example for that would be the reaction of UK government towards the British steel crisis. So ministers sort of have put on statements that say that they want to limit Chinese investments in obviously the major areas, like you've got nuclear areas and then you've got the major investments, infrastructure, etc. Again, retail is not one of those listed policies, but again, it shows that to protect UK business areas, probably the government would have to step in at this point of time. So that is one industry that I think would be really affected by this, and then why the business confidence in that specific industry would be a bit rusty. And then when you talk about EVs, again, it's such an important area because you've got a lot of imports from China and their cost effectiveness is just so great that even with the tariffs, the prices are still very competitive. And that would obviously be so difficult for the British automobile makers as well as just the car production companies over here. So you've got JLR, you've got Aston Martin. They would really be threatened with these tariff impacts and just how they would have to change their production capacity because it's such competitive pricing. And again, I feel like the automotive industry is just so dear to the UK government that they would sort of have to step in, and they already want to bring in a lot of these subsidies for these areas. So yeah, I just think that was a bit interesting to understand why the UK business confidence has been the lowest. What are the future risks that these industries would face, and then what are the policies that would sort of have to come in to outreach all of this impact. But
Yeah.
yeah, what are your thoughts on this?
Yeah, so yeah, you made a whole load of good points there. I mean, it's funny, because it feels to me like this business confidence is down. But then there seem to be other surveys and things like Lloyd's Business Barometer and things, which actually seem to imply that things are actually better. People are feeling better.
Yeah.
So I don't know. It's difficult to ascertain, because I think one of the reasons why this might be difficult to ascertain is because it might, the timing of the surveys, when they were, so when were they taken? Were they taken at what stage of the tariff implementation were they taken? I mean, common sense would suggest that confidence is, you're probably thinking it's more likely to be worse than, not good, rather than, we're seeing a recovery. But anyway, so business confidence, I think the main thing is that they don't know, no one knows what to do in terms of planning, because they obviously, to plan, you need to have quite a stable environment. You need to know, you have to have visibility. And at the moment, they're not quite sure what to do with all the tariffs, because do they assume that it's going to be 10%? Do they assume it's going to be worse? Do they, I mean, what do they do? And I think we're at a very early stage at the moment in terms of the tariff, the spread of the tariffs, and it's going to take a while. So I think that the steel thing is, I mean, it's a particularly sensitive time, because you've got you've got British Steel has been in trouble for a long time. Right? I mean, it's been in trouble for a long, long time, and I suspect that the Chinese were the only ones. So Jingye were the only ones who had the money and had the inclination to go, well, let's give it a go. And it's been difficult for quite some time. So I think they're having problems, and now there's the prospect of the world being flooded with cheap Chinese stuff, like steel, like EVs, like, cheap clothes that are sold on Shein and Temu. So I think that it's only it's perfectly understandable that you've got retailers, car makers, steel makers, etc., being very sensitive about this situation and wanting to try to do something about it. And the thing is, you can't leave it to consumers, you can't leave it to businesses on their own, because they're all going to be very cost conscious in very uncertain circumstances. So, I mean, if you're offered, I mean, it's all very well. I mean, there was another story in here talking about people buying British, which is all very well. But the problem is that when you get to the point of actually buying something, it's very different, because you might be thinking right up until that point of buying, you're thinking, no, I'll buy British, I'll buy British, I'll buy British. But let's say you're buying a T-shirt and the British made one is 35 quid, and the the one on Temu is 8, and they're both kind of the same. You're like, feeling a bit poor at the moment. What should I do? You probably still going to go for that, but maybe you'll just keep it quiet that you bought it from Temu, right? I mean, so that's the thing. I think that's why I think that the government, you have to get involvement from the government level, because they would have to say something like, they would have to put in some kind of restrictions somehow. Otherwise, if you leave it to companies, it's not going to work, I don't think.
True. I think you make a few really good points with the surveys as well. When I read that, I was thinking, well, you've got to be sure of what was the sample size of that survey, who was really taking it, what are the levels at which it had been promoted, advertised as a companies, as proper consumers. I feel like with surveys, it's just, there could be so many discrepancies. Yeah.
Mm.
With something about, like you said, the delayed effects of tariff, like it's still going on. That's what for the UK government to make a decision, it's just something that has to be well taught. And like you said, the effects of tariffs, the way it's been changing everything for a while, it's not really the easiest thing to make a business decision at this point of time. So it's just really about giving some time and seeing what the effect would be to be able to take the most cautious approach. So I understand why these things are sort of happening. And then again, when you're reducing the floodgate, if the government would go forward with something like the de minimis principle, it's just about what impact it would have on the market directly. So it's the consumer demand, right? You're still reducing options for the customers. So then what is the impact on the availability for the customers? Are there good alternative options? And like you said, I think price is a really important driving factor for customers. Like it does really just boil down to that effect. But again, when we talk about companies like Shein and Temu, we've also got the options that the customers have, like their preferences. A lot of people have environmental preferences and social preferences, due to which they might just want to buy British made products. So that's also one of the things that would drive what a consumer's decision would be. So I feel like there are a lot of aspects that are, and then again, like summer spending coming up, and then now since it's been sunny, like the retail stores have seen good sales coming in, but then again, we don't know how long this might go for. But yeah, these are a few things I would say are going on.
Yeah, absolutely. So well, I think we've gone on that one. So I am going to introduce my story today, which I'm smiling because I feel I quite like this story, right? So basically this comes from the Guardian, and it says that there's a very famous, or should I say infamous, British investor called Neil Woodford. He is offering a subscription-based investment service, and he's going to offer it to retail investors, i.e., normal people, not institutions and stuff. Now, the reason why I like this story is because I think this is pretty amazing. That he. So just as a bit of background, Neil Woodford is a fund manager. Okay, so he invests money that is given to him by investors. The idea is he grows the money, he buys investment, he buys shares and things in companies, and the idea is those values go up, and then he returns a lot, more to his clients, and everyone's happy. Now, the thing is that he had a 25-year, it's a very successful career at a company called Invesco, and it's quite a common thing when, if let's say you have you're a star fund manager, and your performance is really good. So it's very difficult to become a star fund manager, because you have to be able to show really good returns over 2 years, 5 years, 10 years, whatever. And the thing is it obviously it takes a long time to earn this reputation. But once you start earning this reputation, people institutions will throw more and more money at you, right? So anyway, he did really well at Invesco. He then did what a lot of the star fund managers end up doing, and that is going off and forming their own, their own place. Now, that started off really well. Everyone thought, yes, this Neil Woodford, he's great. Let's give him loads of money. He's been the one behind our gains, and everything was going well for a few years, and then it turns out that he put too much money into too few investments, and investors asked for their money back. Now, because he bought these into these illiquid investments, illiquid means, in this case, it means difficult to buy and sell. So he put too much money into too few illiquid investments, which meant that when people said, I want my money back, he said, I can't actually get it back at the moment. And the problem is then, once people think, hold on, why can't you get your money back? I think I want my money back. Everyone starts to ask for their money back, right? And then it gets worse. And in his case, he basically, it ended up with, I think, well, I don't know if it fault, I think it, went bust or anyway, basically, he was kicked out and it was all a massive scandal. So he has now come back and he's got this offering. This is, this is going to be called W 4.0. And investors will be able to use these strategies to invest. Now, so the marketing materials, just reading off screen, say that W 4.0 is like having Neil Woodford by your side, presumably minus him asking you to go and get his coffee. But so that's the idea. It looks pretty interesting. But where do you think, who do you think he's aiming this at?
This is what I was thinking. Like, do you think it would be, because I've seen a lot of his promotions, but they sort of come off on like YouTube Shorts or like other areas, and I would think the direct people who are watching that are the younger audience, because like consuming a lot of this information through social media. So again, that would be who sees the advertisements, but then that would not be the ideal customer base, just in the sense of they would not have the financial capacity to be able to help him start his company on the best foot. So I think it would be sort of people who've got more investments, people who have got more information about him, like his previous fans maybe, and just a lot of people who probably understand that part of the market.
No, I think so. I mean, I think with him, he needs to address this part of the market, because I think that the younger end of the market is easier to build a bigger audience quickly, because more younger people are on, Instagram, Shorts, etc., than older people. The problem with that is that really he wants people who can afford to put money into investments. So although that might be good for growth, so although his social media thing may be good for growth in terms of eyeballs, that has to turn into money. And so I think that so I think it's a really interesting idea. I would have thought that it would be pretty popular. But at some stage, I think he's going to hit a point where he's going to need maybe a bigger company to come along and buy it. I mean, one of the other reasons why I like this is because I think it feels to me like younger people are getting more interested in investing.
Sure.
I think a lot of people probably have had a go at crypto at the very least, but I think that there's more interest in this, and I think that with the rise of things like eToro, Robinhood as well, I think this is really good. I think I've got no affiliations or anything like that. I just think, in theory, although he has obviously had a very bad, time, I kind of think, but he has been so good for 25 years, and I would rather follow what he says than, someone on eToro who is supposedly a German tech investor. If you've seen those adverts which say, hey, you can follow, like a German tech expert, or here's, I don't know, Grace from Italy who does this. I don't know any of those people. I don't know what they're. I mean, maybe I'm being overcautious here, but if it's your own money, you don't want to just chuck it at some random person and hope that they're right. So I think that this could be quite interesting, and I think that maybe this could be a great money spinner ultimately for Neil Woodford, because I think that they could come and buy it for quite a lot of money, because if you put something like him with his strategy together with, say, another entity that already has that base, it could be quite powerful, I think.
True. Yeah. I think it would sort of again be building that relation with maybe like retail investors or those that come along. It's just because it's probably these big businesses that will recognize his goodwill in the market and be able to take that chance and have that risk. But I'm just a bit curious as to how do you think this translate into like the fintech regulations, with the UK government being really strict about financial advice and all of these things being given via social media or via these um, outlets. Do you think the fintech regulation aspect of it would play any role in this venture?
Yeah, again, good question. I think that at the moment, I think that we're reaching a stage where there is a realization that more younger people are actually looking at this. And I think that the FCA has to come down hard on people that are not qualified to give advice. I mean, I'm not going to name any names, but there are people that are very prominent on social media, and they say, they talk about personal finance, they talk about investing, they talk about what they're doing investing, and you're thinking, yeah, but you haven't actually got the qualifications. You may have some work experience in this area or may not. And I think it's bad for people to do that, because the problem is if they're not qualified, you take their advice, you've got zero comeback. Whereas if you've got someone who's registered, I say this, I had to pass exams and things to get a registration with the FCA, and you had to do a few exams and things, but the whole idea is you can then say I am qualified to do this, and I think that money is a serious thing, and I think that you can't play around with people's money and do this. So, and that's why I think actually I do question this thing that I believe that eToro does, which is they have like a league table of people who are on the platform and they do well, and you can follow their strategies. But I think that is absolutely ripe for abuse. Like if you were a company, let's say you were a startup, and you thought, I really need to raise some money and all this. You do an IPO, you tell you maybe rope in one of these people from eToro and say, look, there should be ways of stopping this, but I can't see it at the moment. So, but maybe there are. But the idea is you could go to someone like that and say, hey, listen, I'll tell you what, I'll pay you $100,000, right? You tell everyone to buy this stock. We'll give you some stock as well, by the way, and just recommend it to people. And they put it on there. Everyone thinks, wow, great. And that becomes its own hype, because if that person says this is a great investment and everyone believes them, this is the whole thing with investing. You don't necessarily, this is the whole kind of thing, is it's not always who is right that wins. It's who is the one who spots what everyone is going to do just before they do it. And then you don't have to be right, and it will just go up and up and up. And then, but everyone makes they make loads of money, sell out, everyone sells out, thing goes down like a stone, and, they start all over again. I mean, it's not great. And I think that there needs to be more oversight of it. But anyway, yeah. So yeah, I think so. Really, yeah, it's a really interesting thing, and I think that it'll be interesting to see how this develops and whether or not it gets bought up in a year or two by something much bigger.
Definitely. Yeah.
So there we go. Do you have any other thoughts?
No, I just agree with you. I think it's a great opportunity. I really do want to see how it goes. Do people actually do invest in this? What are the company policies with it? And then hopefully it does well.
Brilliant. Okay. All right then. Well, look. Thank you very much indeed. It's been a great to see you, and we'll be back again hopefully tomorrow. But thank you very much indeed. All right.
Thank
see ya.
you. Bye.
Bye.